Managing Director and CEO of Yes Bank joins us now. And Mr. Kumar, thank you for joining us. There is a marked improvement in your asset quality, gross level, even at net level, NPAs have come down, both sequentially and again on a year basis. Are you comfortable with your asset quality? And when do you see the bad loan getting transferred? And are you otherwise fully provided for the concerns going forward? And is it safe to say that credit calls will be negligible going forward?
No, absolutely. If we see like we are having a coverage of 80% on our loan side, which are adequately provided. And we have seen actually, if we see the recoveries, which we have done in FY21 and FY22, out of those recoveries, there was a positive impact on our P&L to the extent of 40% of recovery. That shows that we have been able to recover more than the provisions which we have made on those loans. So this journey would continue, and we are seeing very good traction. Like what we have told last time also, we are in the process of forming a ARC structure. We are quite hopeful that we would be able to do it within this quarter, and then the entire bad loan of the bank would be transferred in a very, very transparent manner to this ARC.
And the NIM trajectory going forward, where do you see that? So do you expect that to translate into profitability and lead ROAs higher? Where do you see ROAs in FY23, and how do you expect trend over medium term then?
This year we have exited at a ROA of 40 basis points. We are quite confident that we would be able to achieve a ROA of 75 basis points, at least in the FY23. And if some of the recoveries happens as per our expectation, then we may be in a position to touch ROA of 1%. But definitely in medium term, the ROA of 1 to 1.5% is something which is achievable for us. And this we are seeing in terms of the business growth and the recoveries. I think bank is absolutely well poised to achieve that ROA.
Right. So give us some overview on the broad income demography of the individuals that you're dispersing retail loans to, and how comfortable is it that you are with the quality of the book?
So if you see the products where we are dispersing on the retail side, so they are the business loans, they are the personal loans, they are for the vehicle loans, and they are also on the home loan. Home loan segment, which was missing earlier, now we are growing very good in the home loan. So I think overall on the retail side, our focus is always in terms of if we can lend more to the salaried class, and similarly where the credit scores are good. And that has also been reflected, if you see in our NPA numbers on the retail side, and also the overdue book on the retail. So I think there has been a lot of improvement both on the NPAs and the overdue book. And similarly, our collection efficiency is touching now almost 98%. So we don't see any kind of risk currently. But at the same time, we also need to be very cautious in terms of inflation. And we would be very, very selective for our customers.
Right. Your recoveries have been pretty sharp in FY22. Also give us some insight on the current year recoveries and what kind of recoveries are you anticipating in FY23?
So on the recovery side, we were expecting a little more than 5,000 crores in FY22, and we have been able to surpass that. Recovery is very granular across all segments. So it is not like any lumpy recovery coming from a single account. And I think this recovery is happening because of our commitment to our stakeholders to recover money for them. And I think we are very, very perseverant in this and going after each and every NPA account to make the recoveries. And the current financial year, that is FY23, we would also be targeting a recovery of more than 5,000 crores. And we are very confident to achieve.
Right. So to create this capital buffer, how much funds do you actually require? And could you share the timeline if you had? When is it that you would come back to the market for further fundraising?
So currently our CET ratio is 11.6, and with the internal accruals for the FY23, our capital is sufficient to take care of our growth requirement. But because of the uncertainties outside, I think it is also important for us to build a buffer on the capital side. So maybe we are not requiring capital for growth, but to create that buffer, whenever there will be an opportunity, we would definitely raise capital in the current financial year.
You know, I'll tell you why I ask, Mr. Kumar, because reports have emerged that some foreign equity players have been wanting to invest a considerable amount of capital in Yes Bank for a certain percentage of stake. Tell us if it's true.
No, so I think we would definitely explore, because ultimately this also depends on the market conditions. It also depends on the mode of raising capital. But we are working towards that, and I think we would like to do it as early as possible.
You've talked about M&A at Yes Bank. Any plans for any kind of a discussion happening on that front?
I also come to know of these things only from newspapers and the media. Okay, so I absolutely will not make any comment on this, but I think we would explore all options which are available.
With many big deals and large banks and NBFCs coming together in banking and the financial space, how are you planning to manage the competition, and what is the goal and ambition here, and what is the longer term vision for Yes Bank?
As we are already started moving on the growth part, and if you see our overall balance sheet has grown by almost 20%. And we also understand that in future, inorganic growth is also something which would be of interest and important for the bank. So I think going forward, if we find any opportunities in terms of acquisitions for our inorganic growth, we would definitely explore that.
Right, Mr. Kumar, thank you so much for taking the time out and speaking with us today. Good to get in all that clarity.